Stop scrolling for a moment and look at this chart. If you only watch the price, nothing special is happening. No clear reversal, no warning, nothing. But inside the RSI, something extremely important is already forming, and this is the part almost every beginner misses. RSI is not just above 70 or below 30. It can actually show a reversal sign before the price even moves. In this lesson, I'm going to teach you 3 simple RSI reversal patterns that appear inside the RSI and warn you about a possible trend change before the market shows anything on the price. So let's get started. Why RSI can show reversal signals early? Before we study the patterns, we need to understand one simple idea. RSI often reacts before the price. The reason is momentum. Momentum shows the strength of buyers or sellers. When buyers are strong, price moves up and RSI rises. When sellers are strong, price moves down and RSI falls. But there is the important part. Momentum usually weakens before the trend actually changes. Think about a car going uphill. Before the car stops and rolls back down, the engine loses power first. The speed slows down before the direction changes. The market works the same way. Before price turns around, the strength behind the move starts to fade, and RSI is very good at showing this early weakness. This is why patterns inside the RSI can warn us earlier than the price chart. They show the change in strength before the change in direction. The double top pattern in RSI. Now let's look at the first pattern. Take a look at the RSI on the screen. You can see the RSI rising during this bullish move. Buyers are strong, momentum is increasing, and the RSI reaches its first peak right here. This first peak shows a strong buying pressure. After that, the RSI pulls back slightly. The small drop tells us that momentum is slowing down for a moment. But now watch what happens next. The RSI tries to move higher again. Buyers are attempting to push momentum up one more time, but this time the RSI cannot move above the previous peak. Instead, it forms another top around the same level. So now we have 2 peaks. This is what we call a double top in the RSI, and if you look at the shape, it almost looks like the letter M. Now look at the price chart above. The price may still look strong. It might continue moving upward or sometimes move sideways. If you only watch the price, the trend may still appear healthy, but the RSI is telling a different story. This double top pattern shows the momentum is no longer getting stronger, and very often, after this second top forms in the RSI, the market begins to slow down, move sideways, or even reverse downward. So, when you see a double top forming inside the RSI, think of it as an early warning that bullish momentum may be fading. However, the pattern itself is not the entry signal. A stronger signal appears when the RSI breaks below the small pullback between the 2 peaks. This break shows that momentum is starting to shift from buyers to sellers, and it can act as a strong warning that a reversal may be approaching. The double bottom pattern in RSI. Now let's look at the opposite situation, the double bottom pattern. This pattern usually appears during a bearish trend when the market has been falling for some time. If you look at the RSI, you will see the line moving downward and reaching a low point. This first low represents a strong selling momentum where sellers are clearly in control of the market. After that, the RSI begins to move slightly upward. The small bounce suggests that the selling pressure is starting to slow down. But then the RSI drops again. Now pay close attention to what happens here. The RSI forms another low, but this time it cannot move much lower than the previous bottom. Instead, it creates a second low around the same level. So now we have 2 lows forming a shape that looks like the letter W. This is what we call a double bottom in the RSI. Here's the important idea. If the sellers were still very strong, the RSI would continue falling and create a clearly lower low. But when the second bottom forms near the first one, it tells us that the downward momentum is weakening. Now look at the price chart above. The price may still appear bearish and many traders might expect the market to continue falling. But the RSI is already showing a change in momentum. Because of this, a double bottom in the RSI can often act as an early warning that the bearish trend may be losing strength. However, just like the double top, the pattern itself is not the entry signal. The stronger signal appears when the RSI breaks above the small pullback between the two bottoms. That breakout shows that bullish momentum is starting to build and the market may soon move higher. Head and shoulders pattern in RSI. The third pattern is the head and shoulders pattern. Most traders already recognize this pattern on the price chart, but what many traders don't realize is that the same structure can also appear inside the RSI, and sometimes it reveals a weakening trend even earlier. Let's see what it forms. First, the RSI moves upward and creates a peak. After that, it pulls back slightly. This first peak is called the left shoulder. Then the RSI rises again and forms a higher peak. This second and higher point is the head. After that, the RSI drops once more and tries to move upward again, but this time it cannot reach the height of the head. Instead, it forms a smaller peak. This becomes the right shoulder. So now we have three peaks: shoulder, head, and shoulder. This structure tells us something important about momentum. The market was strong enough to push momentum higher once and then even higher the second time. But on the third attempt, the strength is no longer there. Buyers try to push momentum upward again, but they fail to reach the previous high. Now look at the price chart above. The price must still be moving upward or sometimes moving sideways. If you only watch the price, the trend may still appear healthy, but the RSI is already giving us a warning. When a clear head and shoulders pattern forms in the RSI, it often signals that bullish momentum is fading and the market may soon begin a downward correction or even a reversal. However, the pattern becomes much more reliable when the RSI breaks below the small support level between the shoulders and the head, known as the neckline. When this neckline breaks, it confirms that momentum has shifted from buyers to sellers. How to use these patterns on real charts. Now the important question is how to actually use these patterns when analyzing real charts. First, don't treat RSI patterns as magic signals. No indicator is perfect. Instead, think of them as early warning signs. When you see a double top, double bottom, or head and shoulders forming inside the RSI, it may be telling you that the momentum of the current trend is starting to weaken. The next step is to look back at the price chart. Ask yourself a few simple questions. Is the market near an important resistance level? Is the price close to support level? Has the trend already moved too far in one direction? When RSI patterns appear near important levels on the price chart, their signals usually become more meaningful. Another powerful confirmation is divergence. If an RSI pattern appears at the same time as the divergence between price and RSI, the probability of a reversal often becomes stronger. If you want to understand divergences better, we already have a full playlist about RSI divergence on this channel. I highly recommend watching it. You can find the link in the description below. So, instead of using RSI patterns alone, try to combine them with the overall structure of the market. When you do that, these patterns become much more reliable and can help you avoid many false signals. Alright, that's it for today. Remember, RSI is not just about overbought and oversold levels. It can also reveal changes in momentum before the price reacts. If you enjoyed this lesson, like the video and subscribe for more practical trading strategies. And let me know in the comments what topic you want me to cover next. Thanks for watching, and I'll see you in the next video.